Morning all, how are we doing? Morning Ladder, morning Frank, morning Diamond, morning Stevie. Where should we start today? Claimant counts just come out for the pound. Average earnings index as well, 6.4, bit positive on average earnings, but earnings has not really got a lot to do with much. And the claimant count is roughly as expected. So no real change there. That's to do with unemployment. So nothing particularly exciting there. Morning, Evil. The pound had a bit of a push on that. So the only thing I've got on at the moment is the pound New Zealand. So did 0.5% yesterday, banking that pound New Zealand short. That's all I've really got on at the minute. So that's the short I took, which I got out of. And I got back in as we pushed up and pushed back down again. Actually, it was here somewhere, somewhere in here. It's just a choppy mess, this thing. It's just utterly choppy. So I'm just getting in short, and I'll keep getting in short until it does something. It's just as long as if it keeps going sideways, I don't really care. As long as it goes sideways within that range, I'll consistently get in and consistently get out. Absolutely fine. So that we've had a bit of a push, but nothing much on that. It's all a bit, not gone anywhere. Morning, Jane. Morning, JL. Is that JL? Is JL Lee and Jane L? You the same person on two devices? So that's the news this morning. No real impact there. We've got the second day of the banking meetings, and this afternoon is the Canadian inflation figures. It's not you, not the same person now. Morning, Freeman. So the CPI this afternoon rather, for the Canadian dollar, is forecast to be a drop. So we'll see what happens. Obviously, with all these inflation figures at the moment, we know inflation is high. It looks like across the board, it looks like inflation is starting to flatten out, which is great. But flattening of inflation doesn't stop interest rates. They keep going beyond inflation usually. Make sure they're getting way above it, which really then starts to move that down. And as that comes down, then the interest rates start to move down. But even if inflation sort of starts to do that, after it's done that, it tends to be that sort of movement, huge spikes and then drops like this. So interest rates will likely be very high and the same all year. So these figures are just going to reinforce the fact that it looks like we're starting to get on top of it. But the recession is going to start. It's always a delayed recession. It's going to start now. The damage is done. So, and then we've got US dollar Empire Manufacturing Index a little bit later as well. So that's what we've got today. Overnight news. Obviously the unemployment change. We had CPIs for Germany as expected. So no changes on the inflation for Germany. Hasn't moved. Hence ECB saying we ain't stopping yet with interest rates and we will carry on going. Bit of Japan news. Bit of China news. GDP for China is up. That's good. All good news for China. Yeah, again, that's what I was just saying. ECB basically 0.5%. Keep going 0.5%. None of this 0.25 talk that's coming out of the Fed. 0.5%. Canada Q4. That's it. So that's yesterday. So yeah, no news overnight really of any impact to worry about either. Currently in Euro Swiss sell. Yeah, I'm trying to get into the Euro Swiss sell. So I set the EA up yesterday. So I am obviously pound New Zealand short. I'm waiting for an Aussie New Zealand short, a Euro Swiss buy, a Euro pound buy, a New Zealand dollar CAD buy, a US dollar CAD buy, a pound US dollar sell, and a Euro yen. Was thinking about it. I didn't put the EA on. I was thinking about Euro yen. I've got my exposure basically. I've got 2 euros there I've got a pound there and a pound there. So I've got £2. US dollar, I've got there and there. Canadian dollar, there and there. And then I've got New Zealand dollar. So those are cancelled. New Zealand dollar, there, there, and there. So I've got triple exposure on the New Zealand dollar. And then, oh yeah, and another pound there, triple exposure on the pound. And then I've got my Aussie there and my Swiss franc there. So I've got no, JPY, spelling it. Why am I typing it backwards? I've got no yen exposure at all planned. So I was looking at yens yesterday and getting into some yens. So the set file that I'm using basically for all of these is a H1 M5. So basically hourly RSI extension has got to be in place. And then I'll take an M5 reversal alert when the hourly RSI extension has got the signal. Then we'll start looking for the first reverse alert to jump in. And then I'm position trading if the trade doesn't pan out. And I'm doing a drawdown control automatically when I get to 1 ADR. So if I go into drawdown by 1 ADR, then I will close out 1/3 of the trade. So it's being done per trade. So the idea being is we get in, pushes against, we get in again, pushes against, gets an ADR. So I scale out a third of that, which obviously brings the average up a little bit faster. If it continues to push, get in again, scale out another third of that, possibly a third of that, which brings the average up again. So I'm just making sure that I'm keeping my average close, and obviously be doing drawdown control, obviously to keep the daily drawdown, because the daily drawdown on prop is the most important thing. Keeping that within limits, hopefully. But again, it's always tricky on prop. It always just depends who you get into and how that individual pair performs. But been no signals on anything yet. So I'm thinking of a yen. And I was toying with it. I was just looking at them all yesterday. I was like, I'm just not sure on the yens which yen I want, if any. So we'll have a look at them again this morning. So no ADRs today, no weeklies. Markets just opened on the DAX. RSIs flat as a pancake. There's nothing to look at this morning. Obviously, as you'd expect, everything's gone flat yesterday because of the bank holiday in America. So if you look at most pairs yesterday, we had a bit of volatility in Asia on stuff. We had a bit of a push and pull in London, and then a flat New York. So very little movement anywhere yesterday. As you can see, all that happened yesterday was we had that big push down, that big push back up again, and nothing. So everything's gone flat. So we're just waiting for movement now. We've got no real opportunities today at the moment, but things are starting to move, as you can see. Again, weak US dollar this morning. So a little bit of a push down there again today. Excuse me. Currently in Euro Swiss sell franc. Yeah, that's good. I was in that as a short. But I'm looking to get in long on Euro Swiss now. It's more of a buy. The reason being, obviously, is that Swiss franc weakness, which I think could possibly continue. We saw, didn't we, with the COT report this week? You know, they've really scaled into short on the Swiss. So there's a lot more shorts than longs on the Swiss franc, and obviously the euro, the market is really long. So you know this euro long Swiss short, long euro Swiss. That's intermediate, long term. Obviously short term on euro Swiss, I think there's a very good chance we're going to come back down and test this propulsion gap. So I think at the moment, short term is a short potentially, but I'm not going to take it because my bias is that way. So I'm going to get in here, hopefully. There's not far to go on the hourly RSI to get the extension, then I'll start my long positions. But yeah, could easily do that, easily. So see how it gets on. So indices wise yesterday, nothing, obviously. So if you look at the London session on the DAX, all we did was we pushed down, we pushed up, we pulled back and accumulated. And it was pretty much the same across the board. DAX is flying this morning so far. Wow, that's a big old candle, isn't it? That's not going to be easy to trade this morning, is it? So FTSE again, very similar story yesterday. FTSE basically just did a big old whipsaw, another bit of a whipsaw, pushed up, then reversed the whole lot, came back, did a massive whipsaw at New York Open, did absolutely nothing. Just terrible yesterday. So didn't go anywhere. If you look at the open and close, yeah. So we opened there, we closed there, and everything. Anyone still in the short on the NAS from yesterday? I didn't take a short on the NAS yesterday. Didn't do anything yesterday. It was shut yesterday. Did you take an opening range breakout? Did you? That would have been there. So if you'd have taken the opening range breakout yesterday, move it one candle over so I can see the wicks. Yeah, I mean, it's too tight. It's too messy. So you would have gone long, stopped out. You'd have gone short, stopped out. You'd have gone long, stopped out. You'd have gone short, stopped out. You'd have gone long, stopped out. You'd have gone short, stopped out. You'd have gone long, stopped out. You'd have gone short, and you'd be in short. But I mean, if you'd have survived that before you actually got into a trade, yesterday's break was still open and running nicely in profit. Well, you must have taken a break right towards the end of the session then and ignored the opening range, which is fine if you did. Or you had a very wide stop, which you must have had a stop. Well, it depends if you took the 15-minute opening range. Oh, I see. Okay. Yeah, so you probably took the 15-minute opening range break, I guess, did you? 5, 10, 15. So that's your 15-minute opening range. Yeah, 15-minute opening range breakout yesterday worked beautifully. So yeah, that's a nice one. But if I was you, I would watch. The thing is, you can't really class it. You can't use this propulsion gap, can you? Because that's not a propulsion move. The market was closed, so this is just algorithmic, no speculative in there. So although there was a propulsion move, I wouldn't really pay a lot of attention to that being as a resistance. But the 15 worked nicely on the holiday. Yeah. That's a good thing to test what works on holidays. But I mean, to be honest, you're better off turning it off, I think, because you're going to get a tight open, regardless of whether you use the 5 or the 15. It's going to be a tight open, isn't it? Because you're not going to get the volume there because they're not there. So yeah, I mean, using the 15 on a holiday day is probably good. Yes, good idea. To be honest, the 5-minute opening range is fantastic for making really, really good profit. The 15 has a much higher strike rate. And I'm finding actually trading this live, the 5 gets faked out a lot. But when the 5 doesn't get faked out, that's when you get those really big paydays. So I'm considering just using a 15 as well. Because a lot of people do use the 15-minute as the opening cash balance. The 5. This is the big debate, and there's no answer to this because there is no. It's not as if the market is told to execute all its large commercial orders within the first X minutes. It just does it at the open. So this is the big debate people have. Do you take the 5 or the 15, the first 15? And a lot of people do use the first 15. And on days like this, you can see why. And again, going back to Al Brooks's 1 hour 30 rule, where you've seen the high or the low of the day, if you take that 15-minute opening range and it breaks, by the time you get to 1.5 hours, that has an 80% probability of being high of day, doesn't it? So, because what tends to happen if we're not going to go for a flyer straight out the gates, we do get a lot of this movement, in which case your hour and a half is probably going to be the 15 as well. And I proved that yesterday, didn't I? When I was in here mucking about with the 1.5 hour range EA. It quite often is inside of that range within the hour and a half, and that range is usually caused by this opening volatility. You see, the opening volatility is the biggest, most of the time is the biggest candle of the session. So it makes sense that would also be the 1.5 hour high or low, unless you're going to get a real chop. So 15-minute, I think, is a good one, definitely. And also that second 15 minutes as well. The second 15 minutes. So taking that one there, so that's your first 15. This is a really bad day to do it on, isn't it? Let's go back and choose another day. What we look at in the NASDAQ. So there's your open there. So your first 15 is 5, 10, 15 is that there. And your second 15 is 5, 10, 15 is that. 5, 10, 15 and that. Yeah. Lower day. So your second 15, so your first 15 break was a fail, stop out, enter long, add long, bang, pop, ka-ching. Yeah, I'm doing some testing at the moment, actually, on the 15, and I'm also testing the 30. 30 is not one I tested before, so I'm testing the 30 as well in more detail. So I am long on the 5. So this is your 15 now. So that is your 15 at the moment, because we've got the 5-minute, the 10-minute, and the 15-minute. At the moment, obviously, depending, this candle's not closed. We've still got 3 minutes left on it. It can do what the hell it likes. But if that propulsion move is also going to form part of the speculative move, we would never expect to get stopped out. We would expect the buyers to step in here and pump. And then obviously we take the 15-minute breakout as well. But anyway, morning shroud. So yeah, just watch that NAS. Yeah. Answer the question after I went off on a waffle. Is the opening range break from yesterday. Pretty much that's your break-even point. And don't forget, we are in a bull market interim at the moment. So if you're short on it, you are completely counter trend. However, obviously we are due a bit of a rest as well, aren't we, today? So, or at some point soon, especially on the DAX. After yesterday, we had a pause day yesterday, but still no pullbacks. Look, no pullbacks at all. Day 12, no pullbacks. This thing is an utter steam train. If you look at the candlesticks from a price action perspective, look, higher low, higher low, higher low, double bottom, higher low, higher low, higher low, higher low, higher low, higher low, higher low. We are not interested in anything but longs at the minute on the DAX. But when we are interested in a short, it's going to be a massive profit take move, I think. I think we're going to get a big old down day. But, we don't know when, do we? So yeah, it's not a point doing analysis yesterday on indices because it was shut half the day. So it's pause candles all round. Yeah, so no directional bias on anything, just bit of rotation. So we'll see where we go today. Everything else yesterday, as I say, was pretty much the same. RSIs are all dead flat. ADRs are all dead flat. So there's not really a lot to look at. So I'm going to throw it out. Anybody want to discuss anything? Talk about trading stuff in any way, shape, or form? Discuss anything to do with trading? Or are there any pairs or instruments you want to look at? Because at the moment, after yesterday's flatness, everything I said yesterday morning is the same. So there's no point in me going through the whole thing again. You might as well just go and watch yesterday's replay, and that's the analysis for today, because it's all the same stuff. I don't want to become a broken record, but the bias is basically the same as yesterday, obviously. Those are your longs and shorts. Nothing's changed. COT's not changed. Sentiment's not changed. None of these figures are changed. So that's all the same. The yens I'm going to run through, actually, because this is the thing with the yen. It's really difficult at the moment, the yen. Really, really, really mixed signals on the yen. It's very, very hard to grasp where that thing's headed. So we'll have a look through all the yens, definitely. But as I say, I'm waiting. The EA is poised, ready to jump in on any of this stuff when it moves. But if it's not moving, obviously I can't get in. So the yens. Okay, DAX pulling back. Let me just open this on my other chart. Just so I've got it up on my other monitor. Oh, quick note on backtesting. Obviously, I got backtesting working again yesterday. I got my tick data back, had to buy it again. Blech. I bought it for a year. So anyway, I'm done for a year. But the good news is I've now got tick data up to the 15th of January. So I can test all of last year in full, which is good. So I've updated all my tick data. So I've got 12 years now. I'm not going any longer than that. 12 years is enough. If you can't prove a strategy in 12 years, no point. So yeah, so that's all back up and running. I was going to show you that. EA, wasn't I? Because it's not on that platform. Why do I keep looking on that platform? I think I loaded up the right thing yesterday, so let's just run it and see. Something like that, I think it was. I think I might have changed the figures. We'll run it and see what happens. I might have changed the figures on it. Yeah, I have. That doesn't look very healthy. Anyway, we'll have a look at that in a minute. Right, so looking at these, excuse me, yens. So obviously we need to bear in mind the intervention perspective from the yen at the moment. They are just battering it down whenever they deem fit at the moment. But right now, obviously, we've had that big strong push last week across the board on all of these. This is obviously the break, which potentially we could look at them coming back up and retesting. However, obviously, it is more of a downtrend. So this is my quandary at the moment. I'm unsure as to whether right now I want to play a short term for the next week or so long, which would make sense, or whether I just want to wait for us to get an extension on the upside to jump in short in line with expected trend. Yeah, see that banked 20 odd grand or so, but it drew down 5, banked 20. And that's just taking the daily range mean reversions, yeah, that I showed yesterday. I didn't have the tick data to test it, but that's the set file that I was using, and it's not a bad return, is it? 4 to 1, 4R return, which is great. Obviously, if you want to make more money, you just up the lot size and the risk size. But the equity curve on it, as you can see, isn't pretty. There's a lot of stagnation in it because we're playing something that is a range, and we're trying to mean revert the range, whereas the most profitable trades are obviously mean reversion. You should only be looking for somewhere between a 1.5 to 2R on mean reversion. That's what the whole point in it. You don't go for a trend on a mean reversion. You go for a mean reversion. So it's a short, sharp scalp. With a trend, with an opening range breakout, you're going to get those lovely, big, expensive moves. So with mean reversion, you are going to get a lot of this. And when you're range bound, that's when you make your money. It's the same, isn't it? Range bound, mean reversion works when you're range bound. Trend works when you break out. Both of them work. Just you don't know which you need to employ. So you need to employ two, which is the whole purpose of me looking at that thing. But anyway, I'm not going to go about that. I'll do some more work on that and look at it in a bit more detail. But obviously, with these yens, as you can see, we want to be going short, don't we? At the moment. So it's a case of disagreeing. And this is the thing that's really throwing me at the moment internally. I'm disagreeing with the institutions. The institutions are all short on the yen. And yet everything is coming down against the yen, meaning the yen is strong. So either the institutions have got it really wrong, or they know something I don't know. But the institutions have been short on this for a while, and it's been short on the yen for a while, and everything against the yen has been coming down, which means the yen has been powering up for a while, hasn't it? So this is what's really stopping me getting into yen at the moment. I haven't got a strong directional bias, and the moves are very fast and hard when they happen. But if you look at the moves up are very, very much like that a lot of the time. The moves down are sharp, bang, 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 bang. Whereas the moves up are smaller when they are strong, or they're more staircase-like. Yeah, climb up the stairs, fall down the elevator shaft. Climb up the stairs, fall down the elevator shaft. So this is why I'm thinking I really want to be short on this, but it goes against COT. So I'm confused.com, but I do want to get some yen exposure on. I just can't at the moment. Looking at all of these, the thing that is really throwing me is this massive propulsion gap. So we tested that one twice on the US dollar yen, and that one seems to have gone. So I've classed that as tested and done. All the others, however, there's your propulsion gap. It's such a massive thing. I just can't get out of my head that I think they want to come back and retest this area. There's a lot of money left offside here, I think, potentially. Either that or they've just had to take the loss on it. So I don't know. I'm really, really conflicted on this yen at the minute as to what to do with it. And right now, obviously, everything was a double bottom bounce this week and at the end of last week. But look at it. It's not really a bounce, is it? It's more of a flag. But I want to get in on an RSI extension. So I'm looking, basically, I'm monitoring the dashboard for either ADR hits to the upside on the yens, or I'm looking for an RSI extension to the upside on the 4 hour or the hourly. I mean, it'll be the hourly, which will obviously trigger first. So the hourly RSI extensions is really where I'm concentrating. I'm looking for a yen pair to get extended. And then I will have a look at them, see what gets extended, and see, when it's extended, where are we in the grand scheme of things on this move? Because obviously, if you chuck in a fib on it, I want to be looking somewhere around the 38 to 61 area for next leg down. But equally, that propulsion move, which we've seen on all these yen pairs, look at how high it pushes when it pushes back up at the moment. We've now also put in a higher low there. So we're actually contracting. It's just real confusion. And I was taught a long time ago by one of my mentors that if you look at a chart and it confuses you, you just move on. Yeah. The Swiss franc is the one he always used to use with me. He used to say, and look, I'll use right now, the best example I can use right now is the pound New Zealand, right? When you're scanning through your charts, you're looking for opportunities. You have a look and go, is there any double tops, any double bottoms, anything that looks like it could be getting to support resistance areas, anything bouncing off of moving averages, da 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 da. If you look at something and go, Jesus Christ, that's a mess, you move on. Yeah. That's what I was taught, and it stood me very well. Look at that. Where's it going? Haven't got a clue. Well, don't trade it then. What am I doing right now? Trading it. But I'm trading it because of the bias. Yeah, this is a -9. That's the reason I'm shorting it, because it's a mess. The market is confused and doesn't know, but I'm getting on side with COT, sentiment, and fundamentals. So I'm okay with that because it's not going anywhere. But that's what I'm feeling at the moment with all of these. I haven't got a clue. Really haven't got a clue. So I will wait for these to get extended. When we get an RSI extension to the upside on the hourly, I will start looking at them. So that's the sort of thing that I'm looking for potentially. Scale in and out. Ideally, obviously, I want to scale in and out straight away. But, just not going to fight that at the moment. Neil, if the Fed lowers its rates, will the Aussie CAD trade start to come down? The Fed's not going to lower its rates. No way. Going up. At least 2 to 3 times more. We're not going down. Aussie CAD at the moment is strong because of the Canadian dollar weakness. And it's strong, a little bit more strong on the rumor of being able to resupply China with coal. But that hasn't come into fruition. So they're buying the rumor at the moment, I think, with the Aussie. So it's fairly strong across the board. But the Canadian dollar, again, it's being hampered at the moment by oil prices, which are starting to. Neil, you think the interest rates are going to come down? The Fed have openly come out and said they will not be reducing interest rates until 2024, and they will be hiking them to 5 to 5.25%. So there's a minimum of a 0.5% interest rate increase coming, minimum. They have never, no one has said the Fed are going to reduce their rates ever. It's not happening. I don't know where you've heard that, but that's not on the cards. Inflation's too high. They can't reduce interest rates with inflation at the levels it's at. They can't do it. Yeah. 6.5. Target for being bad is 5. A good target is 2. They are sky high at the moment. The trouble is we've become accustomed to high figures here. Go back and look historically. The world, every country wants this sitting somewhere there, inflation, because what they want is growth and things to move on at a rate which is manageable. This is too high. We're accustomed to it now. COVID screwed everything. And the fallout, this is the fallout of COVID that we're experiencing now, and it's pushed everything up too high. This is 1.5% higher than it should be as a worst case scenario. So worst case scenario for the Fed would be, right, if it gets anywhere near 5%, we'll think about increasing rates. Yeah, we're above it. Look, we went up by 0.5%. The only decision the Fed is making at the moment is that 0.25 or 0.5. That's their decision, both plus. And should we go to 5 or should we go to 5.25 plus? And we're going to hold it there until 2024. Everybody else at the moment, apart from New Zealand and Japan, because they never do anything with interest rates, take them out of the equation because they don't believe in it. Every other country is talking about nothing but hikes. No one's even mentioned possibly reducing the hikes yet. The US is the first to get there. Look, the US is the first to get anywhere near 5. Well ahead of the curve. Canada, well ahead of the curve. And those are the currencies now which are slowing down, because these have been hugely attractive, because everybody else has had really small interest rates, and these guys moved first, moved fastest, so they've been the bigger. So, no, I think you were right. I was just agreeing on what you said. Did I misunderstand that? See, you said if the Fed lowers its rate, will the Aussie CAD trade start to come down? Do you mean if the Fed reduces it to 0.25 instead of 0.5? Is that what you meant? Reducing it in that respect, i.e. going up by that, not going up by that. Oh, right. Okay. Maybe I am, yeah. I honestly, with the Aussie to CAD, at the moment, it's still a very nice looking short to me, where it is up here. But we're missing this strength at the moment. And that is directly related to that. So we're missing that, which means we're missing that, which means that's getting an edge, which is why we're getting this push. But it's very subtle. You know, if you look at, when you're looking at a chart that makes new highs, yeah, you can have movement like that all the time. Yeah, but there's only actually that point there, that point there, that point there, and that point there that actually made new highs. All of this is an opportunity to get out of a trade if you're wrong, if you're in the wrong direction. It's all shorts. There's lots of it. The last time we actually made a new high was beginning of December. Actually, there's that one there, obviously, which is beginning of January. But so we're just trying to make new highs, and it's not strong. Every time it makes a new high, it has a failure. So I don't think it's a problem being short on this. I just think it might be dragged out, unfortunately, because we're not getting any strength on the Canadian dollar, but it's tricky. DAX has fallen out of bed the opposite direction. So again, false move. So this is again another really good example of the 15-minute opening range break being the better choice. 5, 10, 15, 15-minute high, 15-minute low. That would have been your first entry. I took one long there, which I've been stopped out on, and now I'm 3 short because I've got the 5, 10, 15 opening range. So there's 3 positions there, short, coming down into this propulsion move. So yeah, 15 again wins. I'm seeing this now more. The problem with backtesting, obviously, is when you're doing a backtest on an EA and you're testing different time frames. When you I haven't got the new ones on this server, on this system, have I? It's the old ones. When you're doing tests and you see that profit curve in the strategy tester like that, all you see is profit. You don't see the day-to-day. You don't live the day-to-day, which is why you need to, I think it's very important whenever you're doing any kind of strategy testing is to sit through it. Not all of it, obviously, but sit through some of it so you can physically see what emotions would I have gone through on the day. I'd have gone through a hideous, oh my God, I missed that opening range breakout, trying to mean revert it in this case. But when you sit through it and you can, you flick over after it's been trading for a while and see what's happening to that profit curve, you can see you're going to have to sit through 1, 2, 3, 4, 5 losers, few winners, 1, 2, 3, 4 losers, winners, 1, 2, 3, 4 losers, couple of winners, going sideways for 2 days, 3 days. Yeah. So this is what you need to bear in mind, the emotions. The emotions that personally I'm going through with the opening range breakout, now that I'm trading it for real in real life, is the 5-minute stop outs. I'm seeing this happen very frequently. The false break at the 5. I'm not seeing the false break at the 15, which again brings me back to Larry Williams, the 1.5 hour higher day, lower day theory. So I'm thinking I'm going to switch over to the 15 as well. But the beauty of the 5, 10, 15 is I'm 3 short on this. Ka-ching, if this thing collapses and falls out of bed today, that's a 4K win. If I play the 15 opening range, I'm not going to get the 4K wins, but I'll be more consistent and have less emotional baggage. Again, what type of trader are you? You can't, this is why I provide lots of different set files so you can see what it does, because there's lots of different ways to trade the ORB. And it's going to come down to you as a trader, which you prefer. Some of the people that are DMing me, praising it, like today, you know, who was it earlier said, it was Ladder, wouldn't it? Yeah, you said, anybody still in the 15 in the opening range break from the NASDAQ yesterday? No, I got stopped out. He didn't get stopped out on it yesterday because he was trading the 15. The 15 worked an absolute dream yesterday. The 5, though, didn't. And again, it depends on your stops, yeah? I'm trailing on, I think I'm trading on 40. If you're trading on 60, I might get stopped out and re-enter with a loss. If you're trading on 60, you won't get stopped out on that pullback push, will you? Again, everybody's going to get a different experience with it. But at the end of the day, the strategy is we are looking to grab the trend days. And this is what it captures, the trend days. Some you're going to capture better than others, but there's no right or wrong, is there? So, but I'm seeing this playing out over and over again. The 15 is better. If we look at the 15, so again, that's lovely little equity curve we've got going. We made 13 grand profit. This isn't risking a lot each trade, but you know, it's when you look at these peaks, high there, made more, high there, no more money made until there, made more there, probably none there. Then you made more there, made more there, made more there, made more there. All these periods, you're sitting there not making any cash. You got to sit through this. This could be 2 weeks, couldn't it? Nothing you can do about it. That's life. That's trading. You're not going to win every day. So yeah, so the ORB, I think I've got the set files on this one. I've only got 5 and 15. That's probably the best one to use. We can see both the 5 and the 15 then. Yeah, so in this case, the 5 and the 15 were both the same look. Yeah, but look at that. That's your 1.5 hour low. I haven't got the 1.5 hour. I'll tell you what I'll do. Just for fun, we will draw the 1.5 hour in. I'm not going to put a stop trading time on it either. I'm going to put 22:30 in. So we will be trading the 10 to 11:30. That will be OR3, but we're not going to trade OR3. And ignore the stops and everything at the moment. You know, this is not looking to produce a profit on this. I'm looking to demonstrate the point. There you go. So there's your 1.5 hour. Yeah, so there's your 5 and your 15-minute opening range, which are pretty much the same thing in this particular case on this day. But that's your lower day. 1.5 hours in, the blue line. Yeah, so that becomes low of day. Yeah. So if you'd have closed, and this is another strategy, again, I'm testing at the moment, end of day close. So I'm not using a trailing stop or any kind of stop. I'm using end of day close. So what I'm assuming is when we get in today, if the trend day continues, we're going to put in a bull candle of some description. I don't know what the bull candle is going to be, but it's going to be some kind of bull candle. So what I do is I close it at end of day. Yeah. So in, stop, close wherever the hell. Not looking for a target. I'm not going to trail it so that I get stopped out. I'm literally just going to close it when New York finishes. So again, that's another strategy I'm investigating at the minute, and that looks, again, another good profitable strategy. So there's your difference there between the 5-minute opening range and the 15. So on the 5, you went long, got stopped out, went short, would have got stopped out, and now you're long again on the 15. So for the 15, you only took that short and so far that long. So the 5 created extra loss that day, depending on obviously how you traded it. This is using a really tight stop. So, but there again, on that day, there's nothing to do. It's a rotation day. You're dead regardless, aren't you? So there's your 1.5 hour. Lower day is in. This case, it wasn't quite the 15-minute low, was it? It was, however, the 15-minute high. But on this day, we put in a fake on the 15. Then we got long on the 15-minute high. And off we went. End of day close. Nice profit. These are the days when the 5-minute opening range, 10-minute opening range, and 15-minute opening range breaks will literally make you $4 in a day. These are the days which are just, the 5-minute opening range break is God. In fact, the pre-minute 15 opening range break is even better, which I've got a set file for as well, which is on the blog post. But again, look, the blue lines. Again, your 15-minute high and 1.5 hour high are the same thing. High of the day. The high of the day was in on the very first candle. There's your low of the day, because in an hour and a half, we absolutely collapsed, and that's where your money's made. Again, low of the day, 1.5 hours. There's your 15. High of the day was in until we got to New York. New York's here. No, that's New York open there. And then we broke out of the high of the day in New York. Look. But yes, the 15, I think you're going to make more consistent profit with the 15, unless you're getting rotations like this, obviously. Then that's where your stops strategy comes in. So again, there's another 15 break there. But, this day, the 5 was better. You took the 5 and the 15. You had a lovely, big 5-minute breakout. There's no right or wrong, is there? Bang. Thank you very much. Again, that's another 3-4K day. And that was off the 15-minute opening range break as well. So forget the 5. That was the 15 ORB long. And again, low break on the 15. You couldn't avoid getting stopped out on that false move. But that's, again, something else I'm testing is the 30-minute opening range. So you've got the 5, the 10, the 15, the 20, the 25, the 30. That is your 30 OR break. Again, that one works really well as well. Ladder, that's why I'm running a combination of the ranges. Yeah, it will equal out in the long run. And this is why I'm doing all of this research, because every day you're going to get a different result with a different strategy. Like you said, you got a lovely short on the NAS yesterday where I got stopped out because you're running the 15 instead of the 5. If you test the 30 as well, you will find the 30 has a lot of days where we go like that around the 30, because quite often that 30 minutes we go into an accumulation. So this is the initial opening range cash balance and the initial opening speculation push. You get exhaustion after about half an hour, and then either some kind of pullback ready for the next leg or an accumulation. So that's the danger in the 30. But as long as the 30 holds and that low of day holds at 1.5 hours, worst case scenario is you end up with either a break even or a small loss, or we get the trend day and you make profit as well. You just need to keep your stops small. But because the 30-minute range is quite often wider, your lot size is smaller, so for the profit is smaller. So the 30-minute gives you less profit. The 5-minute gives you absolute max profit when it works. and the 15 has a higher strike rate because you're allowing the opening range chop of the initial cash balance to be completed before you start your move. So between the three of them, they work in sort of all instances. So where I've tested the vast majority of mine on the 5, 10, 15, they've all been very, very profitable. As I said, what I'm finding is they're very hard on the psychology because you will experience more days of chop around that period. So this is kind of what I'm testing, but I'm testing these individually rather than using them as one set file to get in on these three ranges. I'm testing them individually to be run on separate accounts because one account is going to do well and another account won't, or they'll all do. And that's the beauty of it, is the days like this, they will all make a lovely amount of money. And those are the days, you know, if you're trading on prop, especially, those are the days where you go, oh, done for the month. Yeah. If you want to draw 5k out of prop, yeah, those are the days you can bank 10, no problem, on 100k accounts, and stop. Wait for the 2 weeks to go past to get payday, get paid, then turn them back on again. That's the goal for me, is to get to that stage where I can have 3 accounts running. But at the moment, I'm trying to be too over eager, and I'm running too many sets, too many of the aggressive strategies, if you like. So this was doing all right this morning, look, so far. But yeah, anyway, more testing and more development to be done. There you go. See, 15-minute OR there. There's your 15 there. So you still got faked, and you will still get this on the 15 because it is the opening cash balance, obviously. But bang, we got it. 1.5 hour, lower day in, 80%. Again, go and read Al Brooks' book. It explains that in detail. Again, bang, there you go. 1.5 hour, lower the day is in. Bang. 15-minute ORB. Chop. Still got the break, didn't you? 15-minute ORB, still worked. You never got anywhere near your stops. Yeah. End of day close would have got you a little bit of profit. This all needs to be, I say, this is the problem with testing. There are so many variables. Again, this is the reason I put the maximum opening range in. That new setting where we've got you can pick the minimum maximum opening range. When you get in these for the DAX, 65-point opening range on the DAX is vast, absolutely huge. Do you want to be trading those days? Because a lot of the time I see just inside bar trading after that. If you flick over to a 15 or a 30-minute chart, you're going to see one candle on the 15-minute chart there. And for the rest of this session and day, all you're getting is an inside bar after inside bar after inside bar of this control candle. Those are the days we don't want to be doing any trading at all. Beautiful 5, more difficult 15. But, long run, the 15s are, I think now, after trading this, I think they are the better option. So I'm going to work on some more set files working on 15s. But got a particularly choppy period here, haven't we? What date is this? October. Okay, those are the days, the 5s and the 15s on those days do so well. There you go. That's that 5. Can you imagine what your lot size would be there? There's 11 lots in this particular case, but that one hit TP. This particular set file uses a TP, which is why it's out. But any kind of decent trailer on that, scalped it. There you go. So that was the trade there. Them's the days where you've done your month in a day. Anyway, I won't go through all that now. You can do all this yourself. Right. So at the moment, all I've got on is pound New Zealand, as I say. Just riding this wave, basically. Down at the minute, trying to get some kind of movement towards the lows to get out, really. But I think when this breaks, finally, we'll be having a nice strong break to the downside. So everything else, as I say, I'm just waiting for some movement. We had no movement yesterday. Kind of like today's a reset. I'm not going to put any yens on at the moment. Let's move that off. So just basically waiting for stuff to move. Presently, not a lot we can do. DAX has just come down into support. So if looking at the DAX today, ranges are all still in place. So we got yesterday's high now to watch. But that's the low of yesterday, which was this support here. We've got the low of Friday. What day are we on? It's Tuesday, isn't it? So we've got low of Friday. And then further down. So if we are going to get that pullback, remember what we're doing on all these indices. We've had a multi-day push, an entire week of solid strength. We are due a pullback. So when we're pulling back, if we are going to get a pullback day today, then these are the areas you want to be paying attention to. If you've got a decent amount of profit at these levels, either tighten up your stops or get out, or potentially up to you what you want to do, obviously. But these are the areas we would expect to get some kind of movement. So we've got this area there. That's a proper propulsion gap. That's probably the strongest propulsion gap, that one, because this is an accumulation break, whereas this is just part of a big range off of the news. This is the news spike from the unemployment figures. So these lows, ADR today basically is your kind of ultimate low, I would suggest. And these areas to watch out for to the downside. That is if we get the pullback. You know, at the moment, as I say, we're doing nothing but going up. So we just need to wait and see, don't we? All right. So I haven't really got anything else to discuss today. There's not a lot going on, is there? I'll be back this afternoon for the New York session at 2:20. But really today is let's figure out where we're going, because yesterday was dead. And we just need to wait for some movement. So good opportunities for potential moves today, but news catalysts are not until the CPI figures this afternoon. And I think the market's probably going to want to sit on its hands a little bit this morning and be cautious ahead of CPI, because obviously there'll be some movement coming off of the CAD and the CAD as well. Obviously the rates are very high on the CAD. We're 4.25, I think, CAD. Yeah, we're 4.25 on the interest rates on the CAD. Inflation figures are pretty much where they are with the US. Again, we had a negative move on inflation on the last report. So, you know, it's very, very much at the moment, the CAD is the same as the US dollar. Overall, we're bullish, but are we getting to the top of that curve now where everything's starting to become a little unattractive? So I haven't got anything on. And obviously from a VPS perspective, for the CAD, I've got New Zealand CAD and US CAD, which are both longs. So if we can get some strength off of the Canadian dollar this afternoon, that would suit me down to the ground, because it would bring these down, which means we'll get further to an RSI extension to the downside on the hourlies, and then I can start to look for those 5-minute reversal alerts to the long side. But you know, at the moment we're not doing anything, are we? So not a lot to discuss. Go and watch yesterday morning. It's pretty much the same. So, but hopefully we'll get a DAX move today. Now the markets have opened up, and we've certainly collapsed out the lows, but hopefully we're not just going to go into rotation today. We'll see. But yeah, looking for shorts. So again, on this move, I mean, there's not really a propulsion move in there to look at, is there? But it's all one massive propulsion move down, isn't it? So, but this kind of is the wide range bar. But I would look for pullbacks. I mean, obvious pullback is the opening cash balance low for a pullback. Failing that, you want to be looking somewhere between the 38.61 if we are going to do market structure today. Yeah, and put in a new low and head down to those levels. Then this is the sort of area you want to be looking for shorts. But personally, I'm hoping it just collapses out of bed and just disappears to the downside today. That'd be lovely. We'll see. We'll find out later. I'll update you in the afternoon session at 2:20 ahead of New York. Okay, so have a good morning. We'll see where we go today if there's any movement, but we'll be back for. I'm not going to come on for. I was toying with the idea of coming on for the CPI figures, but it is just the CAD. I say it's just the CAD. It is the CAD, but it's not as important as the US ones or the pound ones, I think, at the moment. So I will come on at 2:20, and obviously watch this at 1:30. We're likely to get a lot of movement in the market this afternoon. All right. Okay, so have a good morning, everyone. I will be back at 2:20 for New York session, and we'll see if we can milk something out of the DAX this morning. All right, have a good one. I'll see you this afternoon.